Today's July 10th, 2017, and this is the Investitude podcast. Good morning, John. John's in the office today, so we have them live.
Great to be here, Andrew. Always fun time.
Okay, so I ripped off a video and threw it online for us. I ripped off that Amelia Earhart video because I thought it was kind of cool.
Skillfully ripped off.
Yes, I borrowed it and put it on our site because I just thought it'd be kind of cool. Because we're not getting paid for any hits, so it's none of that stuff. I just thought it was something that if you go to Nigerian TV on YouTube, it's worth taking a look at. You don't have to go through all the ads, and it's there. And 16,000 views.
Nice.
65 comments. One guy's like, total BS. I got a photo from Hawaii of this couple that's not Amelia Earhart, and it's just like, it's a cool feed. Just that's kind of neat, that kind of stuff.
Yeah.
So,
well, it's, as you said, the 10th of July, and we're sitting here just kind of twiddling our thumbs waiting for Prime Day tomorrow.
Oh, God. I remember that last year. I signed up for it. And I went
Did you keep it?
No, it was all junk. My wife's got Prime, but I went on the site, and it was like, everybody was making fun of it. Maybe it was 2 years ago. It was just junk.
Well, but the nice thing is that they let you try it out. If you like it, obviously you keep it. I think a lot of people do keep it. For the package delivery, of course, but also because if you're a Prime member, now you get a lot of movies and everything else. And like our Netflix subscriptions, Andrew, you can download it onto your devices. So you don't need to be hooked up to the internet to watch a movie.
No.
Go try that with Apple. It'll cost you money. With Prime, it's included in the Prime subscription.
I know, because my wife gets it to get the packages, and I said, by the way, do you have Prime? She said, yeah. I go online, all the 24s are there. I've been watching 24 with my kids.
And you can probably download a bunch of stuff. I don't know if 24 is one of those.
But it's there.
Yeah.
I can watch it on my TV because I got one of those Amazon Fire Sticks.
It hammered. The Prime Day coming up just was one more reason to kill the retail stocks. I mean, take a look at Macy's today, getting spanked again. It's like our old friend Jeff Mackey used to say, why is the market down today? Because it's a day that ends in day.
Yeah.
When they're selling, they're just selling, and the retail sector has not been in favor for quite a while, and Amazon is one of the big reasons, but also Jet over at Walmart. More and more people are checking out Walmart's, offerings through Jet, and those are the guys that did diapers.com.
Yeah.
Brilliant guys, sold it to Amazon. These are brilliant guys that know how the logistics and the setup for the omni-channel really work.
Why don't we call up Josh Brown? We'll see what he's doing.
All right, folks, we have reform broker himself, Josh Brown, on the line. Hey, Josh, how you doing?
What's up, Doc?
I think you're like Patty. She just likes saying that. Patricia Martell over at CNBC. So, Josh, you're just getting off of the halftime report and back over to the office, probably getting ready for some meetings with clients and so forth.
I got a shower.
Do you have to shower because of the people you were on the show with, or you just need a shower?
No, usually I got to shower and then do the post-show conference.
Okay.
Should be all right.
Yeah, I think you'll manage. So Prime Day tomorrow. Is this one of the main drivers that everybody decides once a year that they have to sell retailers regardless just because it's Amazon's Prime Day?
I don't know. That's a good question. I think about some of the Amazon Prime Days going back to when I was a kid, some of the traditions that we had, and just really great memories from Prime Day going back to the 1980s. So now it's like a much bigger deal, and I think like Amazon probably took a cue from what Alibaba does, and they're almost like making their own corporate whatever into like a national holiday, and it's working. So is there some follow-through in the investment markets as a result of that? It's definitely possible. I don't know how you'd measure it.
I'm in a complete agreement with you. I think it was brilliant that Bezos basically did exactly piggyback on Alibaba, on Jack Ma, who had this.
Dude, all these holidays are fake though. Like Valentine's Day, Mother's Day, Father's Day. These are like greeting card holidays. They're not religious. No, like Saint Valentine wasn't a religious figure. So it's like, so why wouldn't he do it? Every tech giant should have a holiday. We should do something on the day that Steve Jobs died. We should all buy a second iPhone.
Hey, did you see, by the way, that Dominic Chu tweeted out that he's hearing that the iPhone 8 might be as much as $1,200 if you decide to buy it?
Yeah. So does anyone buy an iPhone, or do we all just pay rent for it on our wireless contracts?
I don't know why you'd buy it these days. I mean, paying rent for it.
Why would you buy it?
It's interest free. I mean, it'd be one thing if Apple was making 7, 12, 18% interest on it, but they're not. They just basically say, hey, it's interest free. You just divide the phone by whatever it is, 24 months. And by the way, if you're on here, you get automatic Apple Care included with it, which is brilliant because, of course, you're going to do that. Otherwise, you pay $110 for it separately.
Yeah, and every product should be sold that way as a subscription. I mean, that's like you look at the best performing stocks in the market. They're all companies that have turned their products into services. Like starting with the software companies, the ones that have moved from selling a license to selling an ongoing, software as a service instead of a one-time transaction. That's the way medicine is headed. It makes perfect sense. So why would you walk into a store with a checkbook to buy a $1,200 iPhone when you could just spend $30 a month or whatever it is? It's the same amount of money you're spending. You just don't really feel it as much.
Yep, it's brilliant. It absolutely is. The same thing with stuff for folks that have to get lotions or fluids for their contact lenses and everything else. Why not just have it be a subscription where they just send it out to you every month, and they just are sure they're assuring themselves of success with the subscription model versus somebody just.
Oh yeah, I'm always buying lotions and fluids. You know me. I use eLotion. eLotion.com. I subscribe. They're always sending me ointments.
It's probably the guys from Jet that did diapers.com. They did eLotion before that.
I like a topical analgesic delivered. UPS.
So into the end of the week, are you all about the financials and JP Morgan, or are you more interested in some of the other stuff this week?
Look, you know my shtick. I just like stocks that are breaking out and trending higher, and it's clean. And then when the trend breaks, it's just like, all right, either A, I'm wrong, or B, I've been in this a long time and now it's not working anymore. Like I don't get attached to companies. You'll never see me get pigeonholed as, he's the Abbott Labs guy. He's an expert in Abbott Labs, so he always likes it. I don't give a shit about Abbott Labs. When it's trending higher, I want to be long. And when it's not, there are other things working out. So when you think about Schwab and JP Morgan and a lot of the large cap banks and financial stocks, these stocks are trending higher. They're breaking out. It took them years to consolidate. The index itself is still a great deal below its pre-crash high. There's a lot of room, and so why not fish in the right pond? So the right pond right now happens to be these names, and what's great about the financials versus a lot of other sectors is that while they're consolidating and doing nothing, you're still picking up some dividend yield. Not a ton, but enough that it keeps it interesting.
I know you're a big fan of Jeff Gundlach, so I'm just going to throw out there a question about. Jeff thinks if we break above 260, that might be, at least for the time being, a level at which people get pretty nervous in the markets. I personally, Josh, don't think we're going to break out through that to the upside here. I think we're going to be more anchored to a lower number. But what's your view?
I don't know. I hate to argue with Grunlock.
And for the record, I said Gunlock, not Grundlock.
Yeah, but Grunlock's bullish. Not bullish, but he's not one of the recession guys. He actually spoke at our conference 2 weeks ago in California. He blazed through. It had to have been 100 slides. It had to have been just one after another, just going through every macro chart conceivable, going through all the different bond markets, interest rate differentials, etc. And he's not in the recession camp. So if we do get above 2.6, it would have to be because the expectation of the markets for economic growth was too low. Mm-hmm. Was too low, and is now being and now there's a dawning realization. If that's the reason why it goes through, it's not going through because we're locked in this existential battle with inflation. That's just not what's going on right now. So if rates are going higher for the right reasons, sure. Should people get nervous? Okay, you should stay nervous. Should always be nervous. But I don't look at that as this is the signal.
I agree, and I think that as it plays out, I think I said with you last week on the desk, I said I'm seeing a lot of bets that maybe in both high yield and in the bonds that maybe they do have a little bit of a pullback. In other words, the yields come back down a little bit. The bonds rally, the yields come down. That's still the camp that I'm in right now. And
isn't that what keeps happening? Isn't that what keeps happening?
It has been.
That's over and over and over again. Every time it looks like rates are about to break out, something happens in Japan or in Europe, or we get a spate of weak economic data. Bond prices are bid immediately. Yields get smacked back down. So, you could probably lose a lot of money anticipating it. Maybe it's better to actually react to it once it happens if it really does break out.
Yeah.
Because the anticipation is just a loser's game.
It sounds like your same advice about the stock. That is, if the chart's breaking out to the upside, you stick with it, and if it's not, you go fish in another pond.
Yeah, time frame dependent. But I even remember 2012 or 2013 sitting at Ira Sohn conference, and I remember Paul Tudor Jones is on stage and he's talking about the time to short bonds is coming, but wait until you see the whites of their eyes. Don't fire too fast. Meanwhile, that's 5 years. It's 5 years ago that there was going to be this imminent moment in bonds. So think about how much money has been lost over the last 5 years. People who are too underweight in terms of credit risk, not taking enough. B, too underweight in terms of duration risk, not taking enough risk to earn reward, or avoiding things like the junk bond market, which is done just fine. Thank you very much. Or avoiding things like preferreds, which have done phenomenally well. Think about how much money has been made, lost rather, in this anticipation game. This is it. No, this is it. No, this is it. You'll know it's it when it happens. And if you're not the first person in the trade, it's not the end of the world.
Yep, there's plenty of time to get on the train. If
right.
it's a train that's really
real.
moving, yeah.
If it's real, it's a 37-year bull market for bonds. So if you think the bear market for bonds is upon us, and rates are going to have this secular move higher for a generation or two, why do you have to guess at it before it happens? Before any of the major trend lines are broken. Until then, how do you know? You can't know.
True. Well, Josh, we wanted to keep it short and sweet, be respectful of your time and so forth. You've been great. We'll make sure that we get your handle on it and that we send you guys and Batchnick and all the guys over Rithholtz Wealth Management a little copy. But appreciate it very much, my friend. I hope we do it more often.
Doctor, I appreciate it.
Have a great one, Josh.
I'll talk to you later.
Well, Josh Brown's always interesting to talk to, John.
Yeah, he's always got an interesting perspective. The guy is half fundamentalist, half chartist. He loves looking at charts and seeing where a breakout might be occurring or a breakdown. And he's been pretty good at calling that. He and his guy, the other guy from his office we have to get on here, Andrew, Batchnick, Michael Batchnick. He is also very good. He's one of the guys that works with Josh and fun guy. I was out at the Neil Diamond concert with him.
Oh, yeah.
And we had a good time. But yeah, Josh, one of my favorite people to duel with on the Halftime Report, and a good friend. So that'll be cool for all the rest of you. Hopefully, give us some comments. Let us know how you liked it. If you liked having Josh on, we'll make it a regular thing.
Okay.
Just to throw one back at you, Andrew, DHI. Again, that DR Horton.
Yeah.
So they got an upgrade. Stock moved up. It's up 3%, stock. I'm just saying this because I think this will drive home to people why you trade options. Stock's up 3% on an upgrade from Wells Fargo. Took their target. They reiterated their buy, took the target from 39 to 41. Not an extraordinary move. Stock's up 3.5%. Nice. The options we bought on Friday, 52% gain. So, again, you got a limited risk trade in the options. I think we paid, I can't remember, it was $1.10 or something like that, but they went up by 50% since last Friday, 52% or 55%, something like that. I just put it out on Twitter minutes ago. But that's why you trade options, because you got a defined amount of risk when you bought the option, and instead of making 3.5% like somebody might have made if they were long the stock, you made 52% on that option trade. That's what options are all about. That's why people trade them, and that's why we love them.
Great way to prime your week.
Prime. By the way, we're going to have JP Morgan earnings on Friday. That's huge. Prime Day, of course, tomorrow. Again, our thanks to all of you, as well as Josh Brown, Reform Broker, for letting us pick his brain. And remember, folks, you can always subscribe through iTunes or YouTube. Leave us a comment and let us know how you like Josh Brown on the show.
Restless nights in Tokyo. Wanna hear all the sounds and see all the sights, from the Champs-Élysées to the Gundam Cafe. Gonna eat so much fish, I think I'm gonna be sick. Gonna blow all my cash on anime. Yes. Don't try to stop me, cause I'm over 9,000.